Yo, what's up team? Welcome back to my YouTube channel. I hope you guys are doing so well. So what we are going to basically look at in today's video is something really so special. Sometime back we talked about moving averages, but seems I didn't tell you one of the secrets because I also just found it out. So what we are going to be basically looking at in today's video is we are going to be checking out one of these moving averages, and then I'll be showing my phone screen just right here, so you guys will actually follow up as I explain some things here and there. But this moving average, of course, is going to help us get trades in, and then identifying the support and resistance levels. So we are going to slide into the video without any further ado. Now as you guys can see in here, I only have 3 pairs on my quote section. You can see I have GBP/JPY, I have GBP/USD, and then USDJPY. Now why do I only have 3 pairs on my watch list? If you have a few pairs, it's easier to understand. So I basically had to master these 3 pairs. So whenever I'm trading GBP/JPY because its moves are basically almost the same as USDJPY, and then I also have GBP/USD. Sometimes I trade EUR/USD because the moves at EUR/USD are actually literally the same as GBP/USD. So that's the first thing. So you can also do the same thing, just have a few currency pairs that you are actually focusing on, than they're actually trading. So you guys can also do the same. Just have a few currency pairs, master them. After that, you are good to go. So that's the first thing. Now what we are going to look at straight away is we are going to slide into the chart section. Okay, we are going to go for the charts, and then I'm going to show you how this actually works. So like I said, we are going to be checking the 50 moving average. Now I'm going to show you some magic with this indicator. So what do? We are going to click the F. Okay, we click the F to add the indicator, click F, then come to main window. As you guys can see, we have to come to main window, then select moving average. Okay, select moving average. Now I had set the settings already, but the setting is for the period it's 50. Then you can put the method to exponential, and then that's the style, any colors, any colors, then the width, again it all depends. Okay, now click done. Awesome, there we go. So as you guys can see, we have the green curve all around the chart, all around the charts. Now what is this indicator going to basically help us? Now first things first, is going to help us get the trends. These are trend establishing indicators that basically help us to identify what the trend could be. Is it an uptrend? Is it a downtrend? I think sometime back I'd actually talked about the 200 moving averages, basically saying when the markets are above the 200 moving average, that's an uptrend. When the markets are below the 200 moving average, that's a downtrend. Now it's the same thing for the 50 moving average, but now one thing that we need to put into consideration is using the moving average alone may not get you trades. That's the first thing. So we have to combine the moving averages with some price action, marking out some of those key levels, marking out your support and resistance levels. Then to those ones who actually trade demand and supply and demand, it's also the same. You can also mark out those key regions, key levels on your charts. Then the moving average can actually come in. Now for our case, we have the 50 moving average. I guess you guys can see. Now what's the magic behind? First things first, like we said, is helping us get the trend. Okay, what's the trend? Is it an uptrend, is it a downtrend, or it's some sort of consolidation sideways? So first things first, when the market's of course above the 50 moving averages, like how you guys can see in here, okay, it's an uptrend. Okay, and then wow, check this out, check this move. You can see that the markets were continuously shooting to the upside, and then we also have this section here whereby the markets being below the 50 moving average, it's a downtrend. So first things first, we have that noted down, right? So you're going to come to your charts, look at those formations. Are the markets above, are the markets below? First things first, we got that covered up. Now second thing that we are basically looking at is this moving average actually helps us to identify pullbacks. Now you guys remember sometime back we have always discussed pullbacks, let's say it's an uptrend, just like in this particular case. Of course, this is what we look at, you know, pushing up, coming for pullback, pushing up, coming for pullback, you know, pushing up, just like that. Now it's the same thing in here, but what's the 50 moving average actually helping us? You can see that whenever the markets come back for a pullback at these levels, at actually the moving average, you can see that it bounces off immediately. Check this out, check this out, you know, check this out. This is super lit, you know, you guys understand this. Now you can see that whenever the markets hit the 50 moving average, they do bounce off. But of course we have two options. If it's broken, it means we could experience a reversal. So you can see it's even helping us establish reversals, you know, market reversals, what could happen possibly. So I hope you guys can really see this thing. So this is the first thing that we are actually this is actually the second thing that we are using the 50 moving average for. Whenever the markets hit the 50 moving average, when a trend is actually there, the second thing in here is when the markets hit the 50 moving average, we see we either trace those pullbacks, you know. Check this example right here. You can see initially it's a push to the upside, then all of a sudden we see a pullback coming to the trend line, coming to the 50 moving average, and then bouncing off. Same thing here, pushing up, coming back for pullback, pushing up, you know, same thing, coming back for pullback, pushing up. Now you guys of course understand the fact that we often take trades at pullbacks. Why? Because we are going with a general market trend. What's the market trend? Is it an uptrend? Is it a downtrend? So if it's an uptrend, now we are looking for pullbacks, but guess what? We have the 50 moving average on. So whenever we have the 50 moving average on, we are waiting for the markets to hit that moving average. We get in our trades, you know, we get in our trades straight away. So you guys can really see, let's check out an example for the downtrend. So you guys can see that we said when the markets of course are below the 50 moving average, this is a super downtrend. This is a super downtrend. Check this out, you know, check this out, a super downtrend. Actually at this particular point where we were, we could again possibly experience a downtrend, but remember we also have to combine this with some price action, you know, getting those key levels. Then what we didn't cover up is whenever we see the markets in a sideways movement, you know, maybe the moving average is basically crossing through, you know, no clear move, that's consolidation. Let's check out if we can get a clear example. So we have this this move here. You can see that the moving average is basically crossing through for a couple of days, 1, 2, 3 full days, you know. So this was all consolidation. We're basically seeing some moves, but not so big, you know, not a clear trend. It was basically again some consolidation here and there. So that's the thing that we have to look at. So I hope you guys really understand the whole concept around the 50 moving average. Now we are going to look at one more example and then see how what we just discussed, you know. So this is USDJPY. We can see some consolidation here. Why? Because you guys can see that the markets were basically just moving in around this region, you know. You guys can see, okay, and then all of a sudden we saw a push to the downside with the candlestick breaking below, right, below the moving average. And then after we saw a push to the upside. Remember we said when we experience a push to the upside, it means the markets are basically above the 50 moving average. You guys get that? Let's get more examples. This is a very good one. You can see we have a push, a pullback, a push, a pullback, but on the moving average, right, the same here again, a push to the upside, pullback, but I guess you guys can actually also relate. The movements at USDJPY are literally almost the same at GBP/JPY, so you guys can actually combine this and, you know, kill these markets together. So that's the whole concept around the 50 moving average. Now a keynote in here is you can also again use the 200 moving average, but the 200 moving average is basically kind of more for swing traders. You know, you're looking at the chart on a bigger time frame, let's say from the daily, weekly, or even the monthly, you know, depending, because Actually, personally, what I use the 200 moving average for is establishing that overall trend. What's the overall trend? What am I basically looking at? The difference is with the 50. On the 50 now, it shows you the bigger picture because you're in a smaller time frame and you are having that clear view of the market. So I hope you guys really enjoyed this video, and I'll be seeing you in another video, and I am out.